Hi everyone, so today we're going to be covering Moody's for an earnings update. This is going to be for Q4 of 2025, so let's get right into it. So earnings came out February 18th, and now we are taking a look at it. And for Q4 2025, they did pretty well, I would say. Revenue was up 13% year over year, increase. Adjusted EPS also surpassed, remember Q4. Moody's Investor Services, their ratings agency part, rose 17%, and Moody's Analytics grew 9%. For the full year of 2025, total revenue increased 9%. Adjusted EPS represented 20% growth. Really good. The operating margin expanded to 51.1%, up 300 basis point, great, and net income of $2.46 billion, also great. The outlook for it, so for 2026, projected between $16.40 and $17. Revenue growth expected to be high single digits. Dividends at 10% increase. Share repurchases at $2 billion. So pretty straightforward. And some of the operational highlights. You have AI integration. The company continues to heavily invest in AI-enabled solutions with 97% retention for customers adopting these technologies. Private credit revenue from private credit surged nearly 60% in 2025, and growth drivers. Performance was supported by strong capital markets activity and high demand for risk management solutions. So altogether, I would say very good. Now, we're going to first take a look at simply Wall Street to see what is happening with the company. And it looks good. So you have free cash flow of $2.5 billion, next 3 years, 3.6. So it's definitely a slow grower, but still it's doing well. Financial health also looks pretty good. We have, obviously have a lot of debt, but I would say it's relatively stable altogether. So I wouldn't be too concerned about it. Now, when we take a look at my DCF on this, my DCF is going to say it's 38% overvalued, which I agree with. It's significantly high. And however we really put it, it's also say 36% for Wall Street. So it's really significantly overvalued right now at current level because it's trading at $441 a share, which is pretty high. The next thing we're going to take a look at is where the stock is trading at right now. And the stock currently is at 441, like I said. We have that it is a 52-week low of 33.78 and a 52-week high of 546. So it's certainly on the lower end, but it's still very expensive in comparison. The net income of the company, it was, I mentioned it briefly in the earnings, but it looks good. So you have 1.3 billion in 2022, now 2.46 billion. So you have a bit of an upgrade. I would say it looks good in general. And lastly, we're going to see Tipranks. And Tipranks is going to say it's a strong buy. 13 buys, 4 holds, 26% upside. Low of 480, average of 555. I would say it looks good overall. I would certainly wait for a bigger sell-off. But altogether, I think it's a great company, but you just have to be a little bit cautious on it. Thank you.